Let me tell you the truth most traders don't want to hear. If I gave you my exact strategy today, my entries, my stop loss, my take profit, you would still blow your account. Not because the strategy is bad, but because your psychology is not ready. 90% of traders are not losing because they don't know what to trade. They're losing because they don't know how to think. Today, I'm breaking down the trading psychology that actually makes traders profitable. Not motivation, not hype, not fake screenshots. This is the psychology professionals use. If you apply it, your results will change. Why most traders fail? Most traders enter the market with the wrong mindset. They think, I need to win today. I need to recover yesterday's loss. If this trade works, my problems are solved. That mindset turns trading into gambling. The market doesn't care about your bills, your emotions, your last loss. And the moment you expect the market to give you something, you lose control. Profitable traders don't ask, how much can I make? They ask, how well can I execute? That difference is everything. Accepting loss is the first shift. Here's the first psychological shift you must make. Back-end index pointing right losses are normal. Not sometimes. Not if the market is bad. Always. Every professional trader loses. The difference is how they react. A losing trade does not mean you're stupid, your strategy failed, the market is against you. It simply means this probability didn't play out. Once you accept losses emotionally, you stop forcing trades. You stop revenge trading. And your account starts breathing again. One trade means nothing. This right here will save your account. One trade means nothing. Let me repeat that. One trade means nothing. Profitable traders think in series of trades. 10 trades, 50 trades, 100 trades. When you focus on one trade, you overmanage, you panic at drawdown, you move stop loss, you exit early. But when you trust the process, you let the probabilities do the work. The market doesn't pay you for being right once. It pays you for being consistent over time. Risk, the real psychology hack. Let me be blunt. If you're emotional in trades, you're risking too much. Psychology is directly linked to position size. When risk is correct, you don't fear stop loss, you don't check every candle, you don't panic on pullbacks. If a stop loss hurts you emotionally, it means your risk is wrong, not your mindset. Professional traders protect their mental capital first. Money comes second. Overtrading and dopamine traps. Most traders are addicted, not to profits, but to clicking buttons. Every entry gives dopamine. Every chart looks like an opportunity. But overtrading is a psychological leak. Profitable traders are boring. They wait. They skip trades. They close the platform. They know no setup equals no trade. No confirmation equals no entry. No discipline equals no future. Sometimes the most profitable decision is to do absolutely nothing. Winning is dangerous too. Here's a hard truth. Big wins destroy more accounts than losses. After a win, traders feel invincible, smarter than a market, ready to increase lot size. That's when rules break. Profitable traders stay disciplined after wins. Same risk, same rules, same patience. They don't trade emotions. They trade systems. If your discipline changes based on results, you don't have discipline yet. Process over money. The fastest way to lose consistency is focusing on money. Money makes you rush setups, ignore rules, force entries. Instead, focus on, was the setup valid? Did I respect my risk? Did I execute cleanly? When execution becomes your goal, profits follow naturally. Money is the reward, not the target. You don't need to trade every day. This part will offend some traders and save others. You do not need to trade every day. Some of the best traders only trade specific sessions, specific conditions, specific setups. They wait for their moment. The market is open every day. Your capital is not unlimited. Missing trades is normal. Forcing trades is deadly. Confidence comes from journaling. Confidence is not emotion. Confidence is evidence. If you don't journal, you repeat mistakes, you rely on memory, you doubt yourself. Journaling shows you what actually works, what hurts your account, who you really are as a trader. When you trust your data, you stop panicking. Confidence comes from clarity. Final mindset shift. Trading is not about being right. It's about being disciplined long enough. The market rewards patience over speed, discipline over emotion, process over ego. Once your psychology is aligned, profitability stops being random. Strong close plus CTA. If this video helped you, like it. It tells the algorithm this content matters. If you want more real trading knowledge, subscribe. No hype, no fake promises. And remember this, the market is not your enemy. Your undisciplined mind is. See you in the next one on Coming Fist. Please don't forget to subscribe to the channel.